Hello guys, how are you? Welcome back to the channel. Bitcoin bully here, apparently the kids call me these days. Guys, huge week in crypto, huge week in the global markets. Holy shit, America having its first quarter of contraction, GDP decline. And probably even bigger than that is Tom Bull has hit 114 subscribers, the triple figures, baby. Yes, if you're enjoying this stuff, hit subscribe if you want to see more of it. Give it a like, give it a comment. It obviously helps in the algorithm, and I put in a lot of work to these videos, and it would be nice if you guys could support the channel. All right, so just like I said, America contracts for the first time since the mid-2020, a 1.4% decline. This is getting into dangerous territory because the economy is contracting while inflation's going up. That's called stagflation, and it is the worst place for a government and a central bank to be in. And we also know that the only ways to sort of make the economy expand again from a policy standpoint is to print money and to lower interest rates. They're reducing the money supply, so there's no room to print more money all of a sudden, right? Because otherwise inflation will keep going up. And we know that they're about to start raising interest rates, and we're already going into a recession. We've got some seriously rough waters ahead, guys, and it's very important to remember to have cash on the sidelines, because recessions, bear markets in asset classes, that's when people make the most cash, because you get the chance to enter towards the bottom and then experience the growth through the next cycle. So remember, nothing in this video is financial advice, just my own opinions and analysis on the market. Take the information, do what you want with it. For me, I've got plenty of cash and gold on the side, and I'm ready to deploy. I'm getting ready to put my fingers into the markets. All right, so no one's speaking about Bitcoin right now, right? Last year and the end of 2020, every single place that I went to, cafe, table next door, my Uber driver, everyone was speaking about Bitcoin. And now we can see that the Bitcoin search trends on Google is coming down towards the lows. So if you bought Bitcoin anywhere through here, sort of August 2018, all the way through to October 2020, then you would have been buying a Bitcoin at an average price of like $5,000 or $6,000 for each one. So when we see these Google trends going down, no one else speaking about it, our ears perk up, right? Everyone goes this way, we do the opposite of the herd. So start preparing yourself. These are good times because no one's speaking about it. That's a good thing, especially when I start diving into some of the news, guys. Holy shit. Fidelity, the biggest superannuation pension fund manager, is letting its customers start to add Bitcoin to its retirement. What do you think that's going to do to the market when the floodgates open up like that to superannuation funds? It's going to be insane. All right, so when we know, right, this is the amount of money that the Fed is printing into the economy. And it peaked in December 2021 at exactly the same time as the NASDAQ peaked, the Australian Stock Exchange peaked, as the S&P and also the UK Stock Exchange. They all peaked around the same time. You can't fight the central banks, and there's no signs right now of them trying to pump up the economy. There's too much inflation. So I'm expecting things to take a bit longer than normal to play out. And some economists and people in government positions will say, oh, we got unemployment at record lows, economy's doing strong. It's like, yeah, from an investing standpoint, guys, every single time we've had a bottom out in the employment rate around here, that sort of 3 to 4% mark, it's signaled a market top. This is in the past 25 years, right? So bottoming out unemployment rate signaled the market top. Even here, bottoming out unemployment rate signaled the coronavirus market top. And so just because the unemployment rate is down here, it doesn't mean it's blue skies up ahead. Now, if we're looking at a correction so let's just look at the American Stock Exchange, for example. If we're looking at a correction, and we can just use I love using history to have an idea of what might happen in the future. And I like to look even further back than what I can normally find, right? Like looking at the 30s, looking at the 40s. Just because something hasn't happened in our lifetime doesn't mean it can't happen now. So, but even just looking at in the last 25 years, the tech bubble took 917 days to play out. So like, was that 2.5 years? The GFC from top to bottom in the stock market was 385 days. So we could just take a bit of an average and say it's an average recession bear market in a stock market should take about 18 months. And if you look at other markets like the English and the Australian, 18 months is a pretty good average. And so if this hit the average, it means that we wouldn't bottom until the middle of 2023. Now, obviously, we've seen back here, every single time we start to roll over and a potential bear market could ensue, the price has been snapped back up. But that's been because the Federal Reserve's done QE1, QE2, QE3, QE4, printing money into the economy. They're not doing that anymore. They're taking money out. So I do think this time is different. Apple reports positive results despite shortages and economic fallout. Apple's executive team is saying that there's expecting a slowdown, expecting there to be 4 to 8 billion revenue hit over the next quarter as a result of supply chain issues. So we're seeing these different tech giants starting to roll over. We're seeing Amazon year on year. It's earning less revenue than what it was at the same time last year. So it looks like a few of these companies are going over the hump, and we're starting to see the effects of a contracting economy. Now, this is the direct physical support. So this is basically central banks and governments giving people money, right? Unemployment benefits, PPP, liquidity support. And as a percent of GDP, you can see it's an outrageous amount that they printed and gave out. In America, up around 23.5% of their GDP, just bam, straight into the pockets of Americans. No wonder there's such high inflation now. You can't blame it on the Ukraine-Russia war. The war hadn't even started yet, and you're already at 7.5% inflation. They love putting the blame on something else. Yes, it all can contribute. It does cause supply chain issues, but we can see these countries here that all did a huge direct physical spending. They're all down here in some of the highest inflation rates. And, if you look across the globe, Russia at 16.5%, Iran at 34%, Uzbekistan 10%, Turkey 61%, Argentina 55%. It is crazy seeing that there's just a sea of red across the globe. Everyone's getting hit by inflation, bar China. 1.5% inflation rate in China right now. While everybody else is printing like crazy, China didn't do that, and now they're in a significantly better position than the rest of the world is in economically. If you look at their growth levels, so over Q1, where'd you go? So over Q1, China saw a GDP growth of 1.3%, whereas America saw a contraction. And year on year, they saw a 4.8% growth. So they have low inflation, and they also have a economy that's still expanding, which is just putting them in a far better place looking forward for the next couple of years. And we can see how the widening gap between America's inflation and China's inflation. And domestically within China, they're not having any supply chain issues. They've still got their factories up and running, and they're still getting things out on time. Whereas in America, you can see these lead times, these delivery times. When it's down here, it means it's taking forever to get people's stuff. And we can see China's president announcing another infrastructure push to boost growth. So while everyone else is pulling money out of the system, these guys are getting ready to print, and it's going to be really interesting to see what happens with the Chinese stock market. I'm not about to go and buy Chinese stocks, but the last time they started doing huge stimulus packages was to stop this falling knife here, and in Q4 2008 they announced a stimulus package, and it rallied 100% in 10 months. So the Shanghai Stock Exchange can just rip to the upside, and these tightening patterns usually break one way or another in an aggressive manner. And so given the circumstances of economic growth, of low inflation rate, of the central banks and government ready to start stimulating, I think this is going to go to the upside. And I think if I had to choose between the American stock market and the Shanghai stock market, I know which one I would pick. Now, there's something here which I just want to have a little rant about. This is an old article, but we all know there's a China-Taiwan tension right now. And we're also seeing supply chain issues throughout the rest of the world, which is causing countries to sort of move away from globalization and try and become self-sufficient and independent. Now, Xi Jinping has said that it's a priority, the reunification of Taiwan with China. Now, something which I just saw the other day is that Taiwan produces 90% of the semiconductors that America uses. And so all of the semiconductors go into microchips, that go into your iPhones, that go into your laptops, all of these different things that America has benefited from technologically. All of your Apples, Amazons, Googles, all these huge companies rely on Taiwan for their semiconductors. So if China goes in and takes Taiwan, then America becomes reliant on China. And these huge firms, basically all the FANG stocks, become reliant on China. So you can see that America has the ability to put sanctions on Russia. Oh, let's kick them out of the global sort of order. America can't do that to China, especially if they take Taiwan. So down to the Australian news. The housing market is broken. Yeah, no shit. 1.6% of private rentals are affordable for those on minimum wage. This study here is showing that in the last year, housing's dropped from 74,000 to 46,000 available homes nationally. And then, however this study comes up with its figures, is showing that a person on minimum wage could only afford 720 out of the 46,000 available rentals nationally. And a couple on an age pension could only afford 663 out of the 46,000 available homes. And so what they're pushing for the government to step up and make sure that the Commonwealth rent assistance stays in line with the average price increases in the houses in the capital cities. Otherwise, price increases are going like that, and people in the minimum wages that are only seeing a 1% year-on-year rise in wages are just getting absolutely left behind, and it's going to cause a massive tick up in homelessness. In America, there are 7 states now that are implementing a financial literacy class. I just think this is phenomenal. It's teaching students about how to manage savings, how to use a bank account, how do loans work, what's the best idea for you to sort of get to a place where if something like a coronavirus pandemic happened again, you could be okay because you've understood, you've started to just wrap your head around how important saving is and living beneath your means. And I don't know how good these classes are going to be, but it's definitely a step in the right direction. Millions of Australians are eligible to receive a financial boost from today. You know, it's helicopter money, just spending it, sending it out, sending it out. It plays a huge role in why we had inflation in the first place, was all this money printing. But I do think this is, obviously it's good. They're targeting the specific groups here which could really use it. And I think that this is going to play a really big role in crypto. Once there's like a central bank digital currency for Australia, I'm pretty sure they're going to have a Reserve Bank of Australia app, and if you want to get rent assistance, they're just going to send you AUD to the Reserve Bank app. I think that's a few years away, but I reckon that sort of thing is coming. Now, just something I noticed when watching an old video is that the Commonwealth Bank Chief Executive Matt Coleman signalled to expect another 10% drop in house prices. That was August 12, 2020, and that was the bottom of the Australian housing market after COVID, that huge week down and then an absolutely massive spike up. And August 2020 was the best time in the last 4 or 5 years to actually go and snap up a house. And so it's just interesting seeing someone that's at the top of the industry just saying, oh, we're going down further when it's right at the bottom. So when you see things like, if crypto starts bottoming out in a few months, if the stock market starts bottoming out later on in the year, you're going to see experts say, expect another massive drop, and you could be missing out on the bottom. So you just want to take the information and not rely on it. Don't be too dependent on it. Don't take anyone's word for gospel. All right, Giselle Bundchen partners with FTX and so is Tom Brady. They're both ambassadors for FTX. And it's crazy seeing crypto infiltrate the mainstream. Like crypto.com is sponsoring everything. And I love Giselle's role in this is she's an environmental and social initiatives advisor for FTX. And so they're going in the right direction, not by just bringing in these influential people, but also putting them in positions that sort of, I don't know, which we want to make this industry green. We don't want to have, we don't want to get a bad rap for polluting the environment. We don't want to ruin the planet. And so this is great that there's a lot of consciousness and people are shining a light on making sure that these projects and Bitcoin are doing their part to not impact the environment or do as little damage as possible. El Salvador has seen since introducing Bitcoin as legal tender, tourism has increased by 30%. Now we're starting to see countries like Central African Republic, we're starting to see lots of other countries start to play with the idea of introducing Bitcoin as well. Imagine you're the head of a country and the country next door has implemented Bitcoin and tourism's jumped 30%. Mate, it's a no-brainer. And so we're going to start seeing these countries fall like dominoes. Next domino was the Central African Republic. Fort Worth, Texas becomes the first state in the US to mine Bitcoin. So it's the first city government in the United States to mine Bitcoin. People still ask me if Bitcoin could go to zero. I mean, anything can happen, but there's genuine concerns that it might actually happen. You've got states mining Bitcoin, and it's the same as the El Salvador, looking at the country next door, getting all this tourism. If you're a state in America and you see that Texas next door is mining Bitcoin and they're bringing in all this revenue, why wouldn't you set the same thing up? And the last news article for today, Fidelity, it's one of America's biggest retirement plan providers. I think they've got 11 trillion in assets under management, and it's Fidelity. It manages plans for 23,000 employees, and it's introducing Bitcoin. It's introducing Bitcoin to these employers, saying, look, if you want to allocate Bitcoin as part of what you allow your employees to invest their 401k in, then you can do it through us. And Fidelity is saying the employees can have up to 20% of their super in Bitcoin, opening the floodgates to an enormous pool of money. And it's the kind of pool of money where when people buy Bitcoin in their super, I don't think they're going to be selling it in a hurry. I reckon they'll just lock it up in their super, and it's going to be taking the supply off the market. And this is just another step in the direction that just shows that this asset is here to stay and there is still a lot of room to grow. All right, this is Bitcoin dominance. Let's go to Bitcoin price. Having a look at the price. So it looks like we're breaking to the downside from this bear flag. So we've spoken about it before. We've got our flagpole down, and then we had the ranging pattern in here. So that's the flagpole, that's the bear flag. Then normally you grab the same size flagpole, you grab that, extrapolate it, bring it to here, gives us a price target down around here, let's say $22,000. It could be a little bit higher because you could argue that the top of the flagpole to the bottom of the flag is there, and so that would give us a price target of around $25,000. So this is it's actually a huge moment right now that we're breaking south. Let's get rid of some of this shit, sorry. So we're breaking south out of this bear flag bottom trend line, and that's only happened in the last sort of 24 to 48 hours. These things usually play out pretty quickly. What happens more often than not, I would say, is a retrace up to the bottom of this trend line, support line, and we use it as resistance. Then we roll over and make our way down. This is the next big support level because of all the support here and all the support here, but also because we've got this massive upward sloping trend line through here. So I'd expect us to bounce off that, and then I still think we're going to roll over and make one more low lower than that. But nothing's really changed. Just need to be patient in this market. Look, There's going to be moments when it's a really good time to buy altcoins. There's going to be moments that's a really good time to buy Bitcoin. Trust me, as that happens, I'm going to be going mental, saying I'm going all in. I'm rotating into altcoins. Just right now, it's like gold and US dollars feels safe to me. I've still got 30% in Bitcoin just in case the price starts going up from here, so I'm still in. But right now, I'm not going to be one of those people that's just like throwing you altcoin gems, because I think altcoins are going to get fucking smashed. All right, hey, thanks for watching all the way to the end. I appreciate it. Don't forget to hit the like button, hit subscribe. Thanks for tuning in, guys, and I'm looking forward to doing this again next week. I'll see you on Sunday. Peace.